Okay, my bias was long to the long side last night. Let's take a look at the day chart. On the MNQ here, micros, you can see that it was trying to break out the previous day, and then overnight, I'm like, I'm going to try to take this long. It was a good thing, but I still hedged. I still put on some short MES. Now the MES position, this is a brand new position. I closed out everything from last night, but last night the MES went against me because I was short, right? And then over here, the MNQ went for me. I was long. I was heavier on the long side. So what balanced out in the accounts, when you analyze it, the long side was like this, almost roughly $600 average, and the short side was about $350 average. So it was a good profit for that because I was biased and heavier to the long side. You don't have to put on a hedge. You don't have to. In fact, Apex doesn't allow you to hedge. Keep that in mind. Everywhere else does. So there's plenty of prop firms out there. My own personal accounts, you can do what you need to do if you like this strategy, but Apex does not like it. So we'll work that out in the future about what we're going to do about that. But right now I'm trying something. I'm trying something different. I am putting on two accounts. There's two accounts that I'm trying this with. And I'm going to go long on one account, short on the other. So two separate accounts. Long on one, short on the other. Let it process. And then make adjustments in those same two accounts by reversing the position or putting the hedge on in the accounts. So right now I have an account that's hedged against another account. But I'm going to put the hedge inside each account by adding the opposite side to each account so that they'll both have a hedge inside them, each one. But I'm starting off with hedging just two separate accounts. There is no hedge inside each account. The two accounts hedge each other. So each account has no hedge inside it. And what I'm going to do is add a hedge inside it when I feel the profits make sense. If it's starting to profit in such a way, I want to add the hedge inside it. So for instance, this account does not have a short against it. It's going long. This account does not have a long against it. It's going short. These two accounts are going against each other. Yeah, two separate accounts. But once this gets profitable, hopefully, then I'll throw on in this account, I'll add to this account a short micro. I'll add the MES and I'll hedge it to lock in some of these profits. All right. If this goes against me, and I'll wait, hopefully, time it properly. If it keeps going, well, the idea with this one is if it keeps going up, to kind of like either add a long so that it's balanced out, or start to try to scale out of some of this and lower the size of the hedge. And I'm thinking this through really for the first time. This is my idea for the first time today to try this. This is the first time I'm thinking about starting a hedge with two different accounts hedged against each other and then creating a hedge internally inside each, like this right here. If this goes up $100, then in this same account, I want to go short an MES. Why would I do that? Well, if it reverses like it did here, the MES side will be profitable to the downside because I'm short the micro and I'm still long the other micro, the MNQ. The MNQ long, the MES short. That's usually the way I play it. I like that for some reason. Good results. So I'll let you know how it all goes. It's kind of confusing. The point is to lock in profits and protect yourself. That's what hedging does. So it's also called spread trading, so whatever. Or let me quickly show you what I'm doing in my notes. Here's the overnight trades. I had a hedge in just one account, which was hedged on both sides. Account 11, I was long and short in the same account. Now, hedged two different accounts. Account 23 and 22, they were hedged against each other. The hedge was not in the same account, but these two accounts were hedged against each other, and then these two accounts were hedged against each other. right? So I closed everything, and that's where you saw the profits of $600 against the negative of 350. Okay, this morning we started a brand new hedge, okay? And new morning trades, hedge two accounts against each other. These two are hedged against each other, right? And then we're going to wait and add the opposite side of the hedge to each account. Adjustments made. I have not made the adjustment for account 24 and 23 yet. They're still hedged against each other only. There is no internal hedge on each side. I hope that makes sense. Okay, after $160 up on this account, I'm only going to hedge a little bit on that same account by shorting 1 micro only. Okay, it's not very much, but it's something. I could do 2 actually. I'm thinking about actually doing 2.
Order filled.
Okay, I added a second one, so we're short 2 and long 2 in that account. But at first I let it run up. I just want to make that clear. First I let it run up and create some profits, and then I shorted in that account, that same account, some MES in case things start to fall. This is where I'm a little puzzled because on the account that I'm only short micros, which was a hedge against a separate account, I have not added anything to the long side. I'm still only short, and it's going against me here, while the other side of this, the account that was hedged against this account, now has its own hedge, long and short, in it. So this is a naked short here. So at some point it would seem that if I don't want this to get any worse, I would add, yeah, that's what I need to do. I need to add 1 micro long in that account. Let's see how that works out. Okay, we started off with these 2 separate accounts here, account 23 and account 24. We started off with those just being hedged against each other. I waited and added opposite side to each account. So when account 23 went up in profit, I added a hedge to the short side. So now that particular account is hedged in its own right. And then we waited, adjustment not made yet for the other one. I added, okay, then I added an MES. Yeah, I added an MES to account 23. That's what that is. I waited. I'm adding as I go. Adjustment not made yet, and then I make the adjustment. Now, so it has its own edge. Okay, that's account 23. Then I added 1 long MNQ to account 24, which started off short 3 MES. I added 1 MNQ long to balance out account 24. So both accounts have their own hedge now. They're not just merely hedged against each other. They have their own hedge inside. So now they're not really hedged against each other anymore.
Order filled.
Okay, I made an adjustment here with account 24 on the long side of the hedge. I went ahead and added another one. It came down quite a bit. So I added another one right here, and now we're long 2 on that side and short 3. I like that balance. It's crashing, it looks like. So I want to be very careful here to just observe. It's moving quite fast to the downside. And here's the hourly chart right here. Big old red engulfing candle. So that's probably the high of the day right there. So it's a strong move up. All the moving averages going up. So we're looking for some bounce activity, 50% down, 76% down into these pivot levels. And we're going to try to continue to be bullish on that. But we're not going to get rid of the hedge to the short side because it is pretty drastic drop. So we want to stay hedged right now. Okay, while I am in these hedges, I do like to take single accounts and take single side trades. So this one, we're trying to build it up into a decent size. I should have shorted another account against it because I would have made several $100s because it did go down quite a bit against me. But we took a trend line break here and we're long right here. And I'm going to try to see how much I can get out of that thing. Hopefully it'll keep going up because it's had such a move down. But the point I'm trying to make right here in this little clip is taking single account trades while you're in a hedge for quick scalps and profits is an interesting modification to the strategy as well. The challenge is you never know where it's going to bounce. And all these lines on my day chart are there for a reason. The high of previous day, there was a line for the low of the current day. And all these the close, which it tapped into and went right back up. And I was watching all the way down on this, taking trades at various places. And right here we got in, and I had like a 3-tick stop loss on it. So we did take 2 losses on the way down, very small losses on that. So what account is that? I could check and see how it's doing. Yeah, up $124. So we only lost a few dollars on those stop losses apparently. Or maybe that was a different account. Anyway, I'll let you know how this goes. Quick little note entry. I have to get better at just simply holding my trades. Now this could come all the way back down and just completely break through the closed gap and keep right on going. But it's a chance I'm willing to take to catch this bigger move up to the upside. And if this is as high as it gets, this is the low of the day. If this is the low of the day, then it's probably going to end green at least a little anyway, no matter what. So if this is the low from closing the gap, I'm not interested in moving my stop loss. Hopefully it'll keep going up. That's the goal, but we'll see. Having the nerve and the moxie to hold when your emotions are telling you something is something we all have to get better at. Well, either I'm chickening out or changing my mind, whatever you want to call it. The gap close, stop was under that pivot. I want to lock in some profit because look at this choppy nasty. You know, if I was looking for a continue straight up kind of thing, and look at these just gigantic redness coming back down. So I'm going to lock in some profit. If it's forming a range at the bottom of the day, which we see often, then we still found the low, possibly. And there might be some great trading opportunities in that range that I'm looking forward to. So, or instead of closing this, I could also add, I'm up $100.
Order
I
canceled.
could take the profit, or I could switch into the MES. Okay, that's exactly what I decided to do. Come into the MES and short 2 micros against the one that I'm long. And now we're green, $7-8 and counting because we entered in the short side. So that's good. It's gonna hinder the upside a little bit, but it's okay. We're locking in about $85-90. Okay, I need to enter in what's going on with this gap close trade. Beautiful trade. It did not continue up on a V-shaped recovery. It is trending higher, which is great news. But we did add the hedge over here. And the hedge is the short side. And we're 3 short, and it's green now finally also. Right? So we're green on both, the short and the long side of the hedge. I like that. And as long as I don't lose the net value of this hedge right now, which is about $150, then I'll stay in this hedge. If it keeps going up, I'll stay in the hedge, because that means if it goes down and I make more money and it goes up, then I'll stay in the short side. Probably I could close it all when I hit a certain dollar figure, or I can continue as long as this gap closes is legit. I don't know. I could hold it until the end of the day. What I don't want to do is give back the $154 that's currently in that hedge. Okay, we're going to have to record this. We have to see this, because here's that gap close that I gotten into, came all the way back. I would have lost all my profits on that had I not been short over here in that same account. Now we're up substantially in that account. And I was thinking about adding, honestly was, adding to my long position and just keeping my stop really, really tight. And even if I would have gotten out here, or even if it would have come back for break even, or even if it would have stopped me out for a little bit, it was worth a try. And so I don't know if I'm going to do it now. It's kind of gone up too far, but that's just amazing how that gap fill can really, really work sometimes. All right, I'm not sure if I added this or not, but we closed that gap fill trade where we closed the gap. It went up. It came all the way back down to the gap, but we had shorted some on the short side. And I think by the time I closed it, both sides were green, which was really super cool. That trade's closed for a $200 profit, I think it was. Okay, in conclusion, I would have done much, much better had I stayed hedge on an additional trade that I had taken for the long side only. I didn't hedge to the downside, and boy, would I've done pretty well on that. So far, we're closing everything we're down about 1,600, and we're up 12, 13, 14 and a half. So we're down about $150 today. But that could have been completely avoided had I hedged myself when I was trying to go long on account 21. I never put on a hedge, and price just kept going down. Everything else was balanced out pretty good, would have been profitable. And I have to remember that sometimes it's okay to go one side, make some profit, close out the trade, be a single direction trader. That's fine. Or get in on one side, have it profit, throw on the hedge, protect yourself. Or like I did today, go long, have it go against me, and lose money. So that's not smart. So this is good. Just pay attention to everything I'm doing. Keep a good record. It was a good experience today. I'm very happy about what I was learning. And I'm looking forward to seeing you all in the next video. All right. Take care, everybody. Peace.